Hi everyone, welcome back to Be Rich. So today I want to talk about something interesting that was asked me on one of your comments. So by end of the video, you'll come to understand how to go about coming with a plan to invest. That's the basic idea of this video. Then I'm going to walk you through an example. And end of the video, you should be with enough knowledge in your hands to understand how to go ahead and invest a bit of money which you have lying around on the table. So this question was asked to me by someone who's following our channel, and he asked me saying that he's around 35 years old and some cash is going to be coming to him. A windfall is going to come to him through some sale or something. He's going to get some windfall. He didn't actually specify the amount. So I took a lot of things into kind of an assumption because he said he had no debts and he has no commitments. And he's already been investing using Anand's principles in different coffee range. So basically that means he's done the basic homework he must have done. He must be having health insurance. So that's done. He's already accumulated some gold, which is done. And he doesn't have any debt, which is great. That's done. He has some emergency fund. Great. That's done. And he's been systematically investing in Tiffin Coffee range and he's got himself a small portfolio. So he's chugging along great. Suddenly, some opportunity in life has come for all of us, and it's been a fortunate opportunity for him, and he's got a windfall of around, I'm assuming, let's say 25 lakhs. And he wants to know what can he do with this 25 lakhs, how to invest it, and make sure that this 25 lakhs which he's getting will be something for him to look forward to when he retires if he needs it. Otherwise, he can leave it as a generational wealth for his future children, or whomever he seems fit at the end of his life. He can leave behind something for them to remember him by. So that is the idea and the premise of this investment. This could be a lot of you out there who's already been investing and been following Anand for the last 3-4 years, and you've already accumulated some kind of a portfolio and you've been investing, you've got your health insurance done, pretty much what I said. And suddenly, for some reason, you got a huge chunk of change coming to you through some inheritance or some sudden bonus which was given to you. The company had given you some shares and they've gone into an IPO and you've sold those shares. So you're sitting with 10-15 lakhs in your table. So what to do? So here I'm talking about 25 lakhs. So what are the key things to do? So key things to do, which we've just spoke about, is goal setting. So what is your long-term financial goal? Are you saving for retirement? Are you aiming to build a generation wealth? Do you have a financial target in mind? So first get that out of the way. For our example, I've taken the fact that we are building generational wealth. I don't need it for retirement. I don't have any financial target in mind. So I've already thought about my children's education. I've got a fund going for that. So this is just building generational wealth. So it keeps it nice and vague so you can adapt it to whatever you want. Next thing which you have to work on is risk tolerance. So as a value investor, you might have a lower risk tolerance, preferring investments in intrinsic value that may be undervalued at the market. But at the same time, you've been doing that already, using Anand's methodology, and you've been investing and you're going to continue doing that from your salary and you're going to continue investing. So this is just a single one-shot investment you're going to make, and maybe you can, since you already have done everything else, this box alone can have a moderate investment strategy, moderate risk tolerance, because since you've done everything else, you can look upon this as in a moderate lens. So what are the asset classes you can look at when you have this kind of a lens? You can First is equity, mutual funds. So if you're cautious, you can stay in that. Mutual funds and look at sipping. But since we're going to be putting lump sum, maybe sipping will not be in the bracket for this one. Next is you can look at bonds and other fixed incomes. So you can put a portion of it in corporate bonds, government bonds, which are stable and have a reduced overall risk portfolio. 3, you can put it in gold. Gold, of course, holds storehouse of value. In terms of investment returns, it doesn't offer great investment returns compared to the other classes which I spoke about. But it definitely beats inflation and it's very safe. And in terms of any kind of a natural calamity or situation like a war, you can pull that gold and run. And the fourth one which you can look at is international funds. Like Anand's been saying, Japan right now looks very inviting. So you can even look at some international funds. So these are the ways you can diversify your assets across different classes. The other alternatives you can look at are REITs, or you say it, real estate investment trusts. But I wouldn't look at that right now because currently the Indian real estate market is overheated and doesn't seem like it's going anywhere. So I would not recommend REITs because there's no real growth in that market right now. And if anything, commercial properties are going to find it harder and harder to rent. And in the current cycle, I would say you have to wait for some time. So I would keep that out of the way. The second one which you can consider, if you do have access, if you are very special, let's say you're working in an IT firm or an IT company and you have access to venture capitals and startup people and they need money and you're able to portion a small portion into some venture capitalist. So you have someone who needs funding and they're willing to take your cash and you trust them and you know their business model and you've done all your background study on whatever their startup is and you believe in it, you can maybe be an angel investor and drop some money into that. So that is something to consider. So continue building the stock portfolio which you're already doing. So it's all based on this. All this, what I'm giving advice is that you continue building your stock portfolio and don't change in any of that course. This is already there and ensure that you have your emergency fund into place. So this investment is a one-shot investment. So you don't need to look at rebalancing your portfolio, rebalancing your investment and all this. This is some windfall came, you're putting it away, investing and letting it grow. So way you can look at it is, I would look at it as, if you take this 25 lakhs is, I would take 40% of it and I'll put it into diversified equity funds. Some of it in index, some of it in large cap, which offers stability, and some small cap. So you can look at it depending the nuances of it, sitting and talking to your financial advisor and explaining. I would say around 40% you can put it equity, around 10 lakhs. I would take another 10%, which is around 2.5 lakhs, and I will look at some international equity. There can be American stock market or Japanese stock market, where you put it and you forget about it. This offers some diversity, the risk is spread, and offers some growth opportunities. So around 10% is where I would put that. 20%, which is around 5 lakhs, I'd keep it in bonds, mixed bonds, maybe some high-grade corporate bonds and government bonds. I don't know. Depends on your appetite and what your financial advisor tells you. I would take around 5 lakhs and put it there. Another 10%. I would take that's around 2.5 lakhs and I'll keep it in gold ETFs. Okay, that's hedge against inflation and currency devaluation, and it kind of keeps some of it in ETF, which is safe. In case of anything, I can always pull it and I can look at it. And the last, I would take another 15% and I would put that into alternative investment opportunities if you do have them. If you don't have them, then you can put them into international equities, what I think. You can take around 15%, which will be around 3.75 lakhs, and you can put it into alternative funds, which is like any venture capitalists or any startup ideas which is around you. I wouldn't take all of it. That's why I bought this, because if you do have this opportunity, you cannot take 25 lakhs and put all of that into a startup venture or a venture capitalist. Out of the 25 lakhs, around 3 lakhs, 75,000, 4 lakhs, you can take and play with it. So that's a great opportunity. So you put some there and that startup or that venture capitalist idea of yours takes off. That gives you great returns in terms of adding to your generational wealth, because this is long term we're looking at. We're not looking at short term. So that idea will incubate, that person will invest, they'll grow their business, and you'll always have a portion of that business. And when it grows and if they become public, this is how all companies start, believe it or not. That company goes public, you'll get a portion of your shares. And like how all these guys, big guys, are exiting out of these big IPOs, you'll also become like one of those and exit and make a lot of money. That's an opportunity. But it's a risk which you have to consider and put it together. The last 5%, which is around 1.25 lakhs, I would keep it in your emergency liquid assets, which gives high yield account. You can put it into that. And so this kind of, any reason you need cash emergency, you have that extra 1.25 lakhs. Or you see a sudden market nosedives, like what happened during pandemic, and you're getting, let's say, all these Tata shares for thrown away prices. You can take that 1.25 lakhs. Imagine you take 1.25 lakhs and you had bought HDFC at the bottom of the pandemic, or IndusInd Bank at the bottom of the pandemic, or Indian Hotels at the bottom of the pandemic. See what that 1.25 lakhs would become today. Or ITC, for example. You bought ITC for 100 rupees. So that is there. So in your kitty, in case you need to deploy it, you can always deploy it. This is the way I would look at it if I had 25 lakhs given to me with all these assumptions I said. So considerations you should keep in mind. Things you should keep in consideration is tax efficiency. You have a long-term focus. And most important, since it's generational wealth you're looking at, you should always have estate planning. So as your wealth grows and money grows, most people don't even think of this. Suddenly they have a lot of money and then they don't know what to do with it and how to plan it. Have this in the back of your mind always, estate planning. How are you going to give this wealth away? Who is going to get it? How they're going to get it? Have a plan. Just don't disappear from the scene and leaving a lot of money on the table, and the next generation having a huge mess to clean up, because sometimes having too much money can have too many problems. Believe it or not, it's actually a thing which is true. I know when you don't have money, it seems like a joke. You're like, ha, but it can be a problem when you have a lot of money, and it can lead to a lot of problems within family dynamics too. So be careful of that if you do this. Thanks for watching the video, guys, and I'll see you in the next one. Bye.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.